Hello and welcome to another Smaulgld live stream. Today we're going to be talking about, is owning hard assets a good idea? We'll also have open mic Friday, anything else you wish to talk about. And while we're waiting for people to come on, the topic tonight is one that would just seem like maybe a foolish rhetorical question. Is owning hard assets a good idea? And you might think, of course it's a good idea. That's how you measure wealth. You have your gold, your silver, your real estate. Those are tangible items. They are things that you would say can't be taken from you. They're not digital illusions of wealth. Basically, these are things that you own. And the answer would come back, of course. Owning hard assets is a great idea, and that's why many people buy gold, buy silver, and buy real estate. But when you think about why you own hard assets, in many instances, it's in order to, at some point, turn them in and benefit from the value of the appreciation of the hard asset. And what is it that you get? Well, you get a fiat digital currency. You get basically something that isn't a hard asset, but yet you desire the value that it has. So you want gold and silver to go higher because you really, what you want is the digital value of that asset so that you can be, quote, rich. Now, if you go back to, let's say 200, 300 years ago, the richest guy in the village would be rich, and it would be obvious that he was rich because he had a big house. He probably had a storehouse in the backyard filled with hay, filled with foodstuffs, and he probably had a good string of horses. So that guy was rich because he had hard assets. He might even have had a safe that he had filled with gold and silver. So let's call this guy Standish. And Standish has a rich life because he's got hard assets. The poor people in the village don't have jack. They don't have horses. They don't have a store of food. They don't have gold and silver in a vault. So, now, that guy was rich in his village. But if he wanted to go be rich, let's say he lived outside of Boston, Standish of Waltham, and he wanted to travel somewhere. Well, when he got there, he was not rich. He was just another traveler who maybe brought a horse with him, or maybe what they call a retinue. He may have brought a carriage with him to show his wealth. But while he was there, he really had no access to his wealth. Back at home was his wealth. He had a stable of horses, his magazine full, he might have had gunpowder, he had gold and silver, but he doesn't bring that with him. So he doesn't bring the accoutrements of wealth with him. Now, there is a story of the Sultan of Mali. Now, his name was Mansa Musa, and he lived between 1280 and, 1330. He was the richest guy in the world because Mali had a lot of gold mining. This guy was so rich because he had, remember the topic is hard assets. He had the hardest assets of all. He had salt and gold. And he actually was so rich that when he wanted to travel and be rich wherever he went, well, he brought his gold with him. So he would take I don't think they had elephants, whatever he did, his whole slaves, wherever he had, he once went on a trip to Mecca. And he brought with him his gold. And he had his servants and his bodyguards. And he brought his wealth with him. Now you can see, in order to be really rich all over the world, you have to be so rich that you can bring your stuff with you and actually protect it. Because part of the problem of being rich and owning goods and hard assets is you have the responsibility of ownership, you have the cost of ownership, you have the maintenance of ownership if it's real estate or horses. You have to insure it if insurance is available. So now I'm starting to look at owning hard assets is somewhat of a liability. Not because I'm against hard assets, But I'm looking at it in the old world compared to the new world. So Standish of Waltham in Massachusetts really can only be rich when he's near his wealth. He can't afford to take his wealth wherever he goes. He's a simple traveler when he goes to Boston. He may try to tell people he's rich, but he's only as rich as whatever he can carry in his pocket. Now, Bitcoin came along, and the first I started paying attention to it was before the big run-up in 2013. And in 2013, I examined it and I said, okay, what's the big deal here? Well, it's digital gold. And I said, no, it's not. There's no gold there. There's nothing there except a bunch of digits. And it was explained to me. And the one thing that stuck in my mind, that the way they explained Bitcoin to me was, they said, do you remember when there was e-gold? And I said, yeah, e-gold was a great idea. You put your money in and then they stored it for you, and you got a digital receipt there was gold for you. And I thought, that brings gold into the 21st century. That's a great thing. Well, the government clamped down on e-gold. They went and they took all the gold, and it took a long time for people to get their gold back. And they said the advantage of Bitcoin, I kept saying, well, what's it backed by? It says it's not backed by anything. They said the advantage of Bitcoin is that they can't take it. There's nothing to take. And I thought, well, there's nothing to take. Then there's no value to take. So it's worthless. I don't get why Bitcoin would be worth anything because there's nothing to take. And so I started thinking about wealth and Standish and the Sultan of Mali, how they're wealthy because they had stuff. But the downside to their wealth was Standish couldn't really bring it with him. He couldn't afford to bring it with him. And he might lose it on the way. And you'd have to have all the gold in the world, basically like the Mansa Musa had, in order to really travel with your wealth. But I still wasn't sold on the idea that it wasn't good to have hard assets. Because there's just something when you say you tangibly own something, that you have it. However, we've talked that there is a cost of ownership, there's a maintenance of ownership, you could lose it, and so on. But what I started to realize about what you call digital, or some people call digital illusions of wealth, they actually are wealth because, as we mentioned earlier, you turn gold and silver in, you turn real estate in, and you get basically dollars in a bank account, which are digital, and you don't have anything. But that's what you want. That's how you measure your wealth. You can say, well, you measure your wealth in ounces. Yeah, but even if you wanted to spend those ounces, you'd still convert them into something that's digital. And today, the average person can be rich all over the world. He can't be rich all over the world with hard assets unless he wants to travel with either bodyguards and he wants to travel with monster boxes of silver. Otherwise, he's only rich basically where he has his hard assets in his house, and his gold, and his silver. But even there, he can't convert those hard assets or riches into anything until he turns it into some type of non-hard asset, meaning fiat currencies, dollars, or so on. And that's where I started to warm up to the concept of cryptocurrencies, because I don't like the idea that the fiat currencies are digital. I don't like the idea that they're not backed by anything. I don't like the idea that you don't have anything. But what I do like the idea of, and everyone seems to, is you do want to get rich. And the way you think of getting rich is accumulating those fiat currencies. So if you're a European, an Italian, you want to get tanti euro. You want to get as many euro as you can. If you're an American, you want as many dollars. And that's where Bitcoin came in. I said to myself, well, people have already accepted this digital illusion of wealth, so to speak. They're satisfied with it. In fact, there are some advantages to it. As we mentioned, you can be rich all over the world. If you have $100,000 in a bank account, forget Bitcoin, you could travel to Europe, Australia, Africa, and in most places where there's a bank, you can pull out your dollars in an ATM machine and get euro, and you can go be the richest guy in the cafe in Spain. That's basically a way of taking your wealth with you, but you can't take your hard assets with you. Now, there are things like gold money that do somewhat allow the hard asset to be moved into a digital form. But you still have the responsibility if you actually wanted to bring your hard assets with you. So in any case, when you're dealing with hard assets and ownership of them, there's always a responsibility. Now, you can give away that responsibility to a third party like gold money, and you can hope that they're going to hold on to you can hold on to the hard asset for you, but you don't actually have control over it. Now, Rob Gibbs points out, and I've had this discussion with him before, your point on millennials not owning anything is salient. Physical assets, precious metals, are things not important to this generation. Experience and ideals are. I think it's even a bit more complicated than that. So if you think about millennials, it's not, I don't think millennials have any special world outlook. I think that world outlook is just a function of how the world has developed. It's no mystery to me why people who like hard assets like gold and silver tend to be males and tend to be over the age of 40. They grew up with the idea that physical assets were the valuable in things. Now, the millennials did not grow up with that. They grew up downloading music, watching videos, never really owning much. Part of that is because they did not have the material wealth that maybe the baby boomers and Gen X had. But really, I think it's less a matter of access to wealth. It's more a function that we had things like Airbnb. You have everything where you rent everything and you don't own it. Now, there's an advantage not to owning things, as we just mentioned. When you own things, hard assets, you have a responsibility to take care of them, to protect them, to maintain them, and to insure them. And also, if you want to be rich everywhere, you have to bring them with you. Well, you can be rich as a millennial, and you can go and stay in Airbnb. You can get an Uber anywhere you go. You don't have to buy a car and take it everywhere. That's the equivalent of Standish in our initial example of taking the horses all the way into Boston to display his wealth. You can display whatever wealth you have in today's world by going into the non-hard asset world, by going into the digital world and bringing your credit card with you and renting a Airbnb place, ordering a taxi, but never actually owning everything. Now, the downside to all that is that you don't own anything, but I'm starting to see that there's upsides. Now, this is where, again, where Bitcoin comes into all of this. Once you accept the idea that digital currencies, fiat currencies, are not backed by anything, what difference does it make if it's Bitcoin or a private issuer? And I would argue it's actually better in some respects that it's not owned by an issuer. So, for example, another thing that opened my eyes to cryptocurrencies was when India decided overnight that they were going to recall their rupee notes. They just said, the president went on TV and he said, guess what? You don't turn these things in the next couple of days, they have no value. Well, they can't do that to gold. So an advantage to a hard asset is they can't just say, hey, everybody, you know that gold and silver you got? We think it's worthless, so it is now worthless. Now, they try to do that on the COMEX, but it's not the same thing as actually being able to, by decree, saying it's not worth anything. In fact, they'd confiscate it, but confiscating would show that it's worth something. So they really can't devalue physical assets the way they can their own digital assets. But the difference with Bitcoin, Litecoin, all the other cryptocurrencies is no one can come out one day and say they're not worth anything. There is no fiat involved where there's an issuer who can say, Mr. Bitcoin can't wake up in the morning and say, your Bitcoin's not worth anything. Furthermore, the other thing that can happen with Bitcoin is Mr. Bitcoin can't kick you off the system. So in the digital world, especially if you go to a cashless blockchain society where you have the issuer being the Federal Reserve, the European Central Bank, worse, the Chinese government, the People's Bank of China, they can decide, and they already do this in China, that they don't think that you're worthy to own property, hard assets. They don't think you're worthy to get on a plane or a train or do anything. So they can freeze your funds. They can freeze your bank account. They can freeze your credit card. They can do that in the United States too. What they can't do, though, is Bitcoin can't be frozen, and there isn't a Mr. Bitcoin who can revalue Bitcoin overnight. So I started to look at it as, I do believe that the hard assets have their benefits, but the limitation on hard assets are that you need to control them, maintain them, insure them, and you can't really travel with them. And that is the downside. The upside to the digital world is you can bring your wealth anywhere. You can be rich all over the world. But let's say you're out being rich all over the world and you're in Europe and you're in that cafe and they decide that you've done something wrong, there's a mistaken identity, and they freeze your bank account and they freeze your credit card. Well, you're no longer rich. In fact, you have nothing. You don't even have any physical assets with you. All you have is what you think you have is some digital wealth in the bank, but you don't have it. However, if you happen to have Bitcoin or Litecoin or something, you may be able to get by. You can now use those digital currencies. So that was my thoughts for tonight as to why I think that digital assets, while there are benefits to them, the danger is when they're controlled by a central issuer, you can be shut off from them. And that the problem with hard assets are you can only accumulate so much, and then you have to have them all in one place, and you really can't bring them with you. I don't mean when you die. You really can't go on a journey like the Sultan of Mali and travel with a retinue of people who are going to protect your assets. You'd have to be really rich. So our friend Standish of Waltham in Massachusetts is basically only rich when he's home with his assets. So I think that people are making there's a point to all this, that people have made the point that if you want to, quote, protect yourself, it may be that you need to do it in a form of assets outside the banking system where you can't be cut off, and that includes hard assets, which can be confiscated, but still you have them and they have their value independent of the banking system, and also digital assets that are not issued by a centrally run entity where they can kick you off the system or revalue their those assets. All right, let's see what some of the comments are, and then we're going to change subject. If there's anything, you have any questions or observations for the evening, we'll call them out and maybe shed some light on them. Gus the Broker, it is Saturday morning here at Keystone, but sometimes I push the limit and I'm active on this mad machine that I'm enslaved to. Just working late and often work 30 hours nonstop and more. Gus, can you tell us what you are working on if you don't mind? Next one. That can be good if it's work that you are passionate about. Yes, if he's working on something he's passionate about. But he did use the word enslaved. Ken Robinson, it's a crapshoot. You got to pick number one, the right one, and then you got to hope that it is still around. I don't know what that refers to. Rob Gibbs says, what are your thoughts on Bitcoin whales and price manipulation? Clearly, the Bitcoin whales have as much control over the price of Bitcoin that maybe even more than they have over, in the COMEX. What the Bitcoin whales did, and you could see this is why the price stopped rising, was they now, I believe, and it's very hard to tell what's going on, but they can actually control and make even more fortune from their Bitcoin holdings once they came up with the idea that there were Bitcoin futures from the CME group, the CBOE. All they have to do is use their massive trading positions, or even spoof, and they can drive the price up by making some buys, and then they know that they can go or turn around, go to the futures exchange, and sell short, make a big bet on a short. And all they have to do is sell some of their Bitcoin and then go collect their winnings and then buy low again and accumulate more Bitcoin and then repeat again. Then sell short, take a short position out on the COMEX, sell a couple of shares, just enough to make the price go down, to the strike price that they need, collect their winnings on COMEX or whatever it is, the CME group, take their fiat, turn it back into Bitcoin, buy it at a lower price, and then on and on and on. So I think that that happens all the time. The other thing that is very interesting to me is how it's not just Bitcoin. If you ever watch, even just on GDAX, you can just toggle through Litecoin, Bitcoin, and Ethereum. There'll be a big sell for Bitcoin, and at the same time, Litecoin goes down. At the same time, Ethereum goes down, and then there'll be a minute where there's a big spike up in Bitcoin, and there'll be a big spike in. They rarely work independently. They seem to all move at the same time. So some people say that there were some Bitcoin drops because of Mt. Gox selling. Well, if that was true, then you wouldn't have all the other coins fall at the same time, because if a specific selling for Bitcoin from Mt. Gox, you would think that you would think that that would only apply to Bitcoin. But it seems that there's some type of coordination where nearly all the top coins trade almost in lockstep with each other. Now, the one exception is Bitcoin Cash, and I guess you have a Bitcoin Cash whale. You have Roger Ver, and that one seems to move at different times and moves in bigger increments than Bitcoin. Now, Gus the Broken 2 says he's been gold and silversmithing and engraving business since 1973. Now, that is a very interesting profession, buying and supplying and trading as well for the top segment in the Netherlands. Keystone Stacker. Well, Gus, that sounds very interesting to me. I teach 5th grade here in the Keystone state of Pennsylvania. I love my job. It's very challenging and stressful, but like most jobs, I love it. Well, Keystone Stacker, I used to be a elementary school teacher. I did that for about 5 years. I did that in the Bronx, so I do have some sympathy for teachers and what they put up with, and also the rewards from teaching. All right. It looks like we've got 18 people here, and I've decided to put away a half an hour. So we've got another 7 minutes if anyone has any observations of the day. Let's see. Was there anything that happened today? I did see, but I did not follow what happened with Paul Manafort. It looked like they went after him on another charge, which to me just highlights, it's like, what does Paul Manafort have to do with any of this? I mean, the first charge was something to do with his business dealings and tax dealings in the Ukraine in 2004, and today he got hit with something else. Also, the other thing I saw was some guy who works on the Senate Intelligence Committee. He's been leaking. He's been there for 27 years. He's been leaking to the girlfriend at the New York Times who was like 22 years old. He's 57 years old. So that highlights that the people that work in government, they have this cozy relationship. That's why they call it the deep state. If they have this relationship with reporters at the New York Times, Washington Post, you can bet that that's how they think they run things, is the people on the inside. People have been working in government for years, not elected officials. These weren't members of the Senate, although you do have Congressman Schiff apparently does some leaking. But this is a guy who's just been there, and he's been leaking to the New York Times. Joe Lazaro, do you think that state institutions like the Texas Bullion Depository can be part of a new monetary system one day? There isn't demand for it now, but what happens when the Fed launches another QE? Well, the Texas Bullion Depository, I think I've been seeing stories, and I believe it's finally opened, and the idea with that depository is one of the guys was saying, I don't know if it was the governor, but he was saying, well, we can now take our gold that we have stored at the New York Fed, and we can bring it here. Now, a lot of countries store gold at the New York Fed. In New York, it's at the vault below. It's in Wall Street somewhere. And Texas will be able to store their gold there. As far as it being part of a monetary system, the only way that could happen is if it is a state monetary system, because obviously it's a Texas bullion depository. I don't know what the rules are for who can put their gold or silver there, but once you have a situs where there's a place where there's a lot of gold and silver, then you know that's where you can start playing games with it. You can lend it out, you can put claims on it. So I don't know what the plans are for it, whether it's a pure, you go in there with 3 coins, you say, here's my 3 gold coins. I don't know if people can go in there and retrieve them. I have to read up on that. But I think the only type of depository that would make sense is the type where you can go in and get it. If you have to send it there and then they tell you it's there, you know, there's arrangements like that with Brinks. You can't go to Brinks and get it. You get a receipt and they allocate. If you send them, I don't know, a 19 monster box of 1990 Silver Eagles, you're supposed to get a monster box of 1990 Silver Eagles back. You're not supposed to get 500 ounces of silver, any of their choice. I don't know what the Texas depository is. The only way you can run a monetary system, though, you cannot run a monetary system on Silver Eagles and also some silverware and then maybe some gold buffaloes. You have to have like what they have in COMEX. It has to be a type of gold that's fungible with other gold. For example, in COMEX you have the 1,000 ounce good delivery silver bars. You have the gold good delivery bars. They have to be at a certain size where they're fungible with other gold. So I don't think they set that up to be a monetary system. I think in a financial collapse, it's a good thing to have a depository where people can go and know that their wealth is safe. And that is what we talked about at the top of the show. We were talking about the value of hard assets, but then also the downside is when your assets are in there, unless they're digitized, your wealth is there. It's not wherever you go. It doesn't go with you like Bitcoin does, or even your bank account or your credit card goes. So I don't know how it's going to work out. I haven't read that much about it other than that they were setting it up. I know it seems to be ready. Well, we'll see. Next summer, will the Fed still be raising rates? Asked Julie Keller. Thanks for your comment on the gold Eagles, the update that we did there. I did see your comment and get a chance to respond. Next summer, the Fed still be raising rates? I would say no. And the reason is that it's what Fed President James Bullard said, St. Louis Fed President James Bullard said about a week ago. And he's generally, I think, somewhat of a buffoon, but I think he plays a buffoon. He says a lot of things when they need someone to say something. But what he said the other day was, which is true, the Fed really can't keep raising rates, not for the reasons that we say. Well, it's going to make it harder for the U.S. to pay its debts because the interest rates go higher and then the cost of servicing the debt is higher. But the real reason is the other central banks are still at zero or negative. And I think the Fed wanted to create some space between themselves and the other central banks so that they can continue to have demand for treasuries. Remember, why buy a bond that pays no interest or has negative interest rates when you can buy a U.S. Treasury bond and get a few percentage points on your money? But there does come a point if the U.S. Fed or the Fed keeps raising rates and those rates get to a point where they're far in excess of the Bank of Japan, the Bank of England, the ECB, then the dollar would become way too strong. It would also create problems for the emerging markets because they have to pay back their dollar-denominated debt, which is what most of them do. They denominate their debt in dollars because no one wants their third world currency. It would make it very expensive for them as well, and that could have some systemic impact if you have third world defaults. You know, that puts strain on the IMF. We just saw one of the largest bailouts of, I think it was Argentina, and there's a lot of people who own debt in Argentina, and they're happy now that the IMF bailed them out. So I don't think the Fed wants to get too far ahead of the rest of the central banks. We've seen the coordination when the United States Fed stopped QE in December 2015. Japan immediately started one of their own. And then the Fed convinced the ECB, who had never done QE, to start their own QE. So you have this back and forth. And once the Fed stops raising rates, which will probably be this year, I don't think they'll be raising them next year, that's when you'll see, and you're starting to hear noises already, the ECB, the Bank of England, and so on will start raising their rates. And that may give some leeway for the Fed to hold off on further rates and maybe even start to think about rate cuts. But if the economy continues to grow, at least by the way they measure it, and the GDP is in the 3, 4, 5%, then the Fed will just leave things, and they may even have to, in their minds, raise interest rates even into next summer because of inflation. But I think at that point, the pace of interest rate hikes will be faster out of the Bank of England, ECB, and maybe even the Bank of Japan. Gus the Broken. I represent the silversmithing in this country for the last millennium. Okay, I made a history lovely as a master tradesman and to be remembered. Nothing came easy, it's all handmade. I would love to see if you can somehow upload some photos, maybe email me them. People would love to see some of your work if you have a website. Well, thanks for the question. Well, we've gone a half an hour. That's what I said I would do. Unless there is any other questions, I think I'm going to cut off now. And I want to thank everyone for joining me tonight. And I'll try to do this between 7 and 9 as often as I can. So please check back and thank everyone very much.